Hi everyone, today let's take a quick look at Chipotle earnings, then we'll look at all of the usual data and charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Chipotle crushed it. They topped earnings estimates and same-store sales expectations. And we can see it here. Earnings $10.36 compared to $9.75. Massive beat. Revenue continues to beat there as well. Net sales rose 15% to $2.52 billion. So this is just another massive quarter for a very strong company. You could definitely argue that Chipotle is very expensive, and it is for a fast casual dining location. But when they continue to deliver like they are on the top and bottom lines, and then they are opening 121 new locations during this quarter and improving their sales at each location, this continues to be a reasonable opportunity. It is worth noting that even with this strong growth, they're still up just 1% in extended trading. That just goes to show, even with really strong results, this is an expensive company, but this also speaks to the general consumer that people are still out there and spending money at fast casual restaurants. Moving over to fear and greed, we did not move here today, so previous close 73, still at 73. And then looking at the individuals, no change here to momentum, but looking at strength and breadth, you can see breadth continues to taper off, strength hanging in there. And then looking at put call ratio, still in extreme greed. Maybe we'll take a look at that one later on the charts. And then you can see volatility at neutral continues to dip down to the SMA. And then safe haven demand, extreme greed, as well as junk bond demand in greed. So still lots of greed in markets. And we really haven't seen any major surges up. So that's a little bit concerning. But we're not at extreme greed anymore. Moving over to the seasonality calendar, we are at the 6th, so still expecting flatline prices, which is what we're getting. We'll wait to see if on the 7th we get a bit of a pop into the 8th. That'll be interesting. Right now, still in this flatter period, slightly down here on the Dow as well as the SPY, but the NASDAQ and the Russell still hovering flat. The Russell was up a little bit today, so maybe it's starting to pick up a little bit, but right now a flatter period. And then looking at the seasonality calendar, you can see still bullish all the way up until options expiration, and then it gets to be a little bit more bearish period. Moving over to earnings, you can see lots of green just about everywhere on the calendar. Gilead missed on the bottom line, Carrier Global missed on the top line, but overall lots of green on the calendar from the biggest companies. I did want to highlight Ford beating on the top and bottom line by a pretty wide margin on earnings, 29 cents versus 12 cents, so more than doubling earnings expectations on stronger revenues. Pretty strong growth there from Ford. And then looking at tomorrow, still got Disney, Uber, PayPal, CVS, O'Reilly, Yum Brands, Allstate, Hilton, quite a few bigger companies. And then looking at Thursday, you have AstraZeneca and some oil companies here with ConocoPhillips and Duke Energy. Again, most of the heavy hitters are done, but still a couple of bigger players over the next few days. Moving over to the economic calendar, you can see that 3-year note auction came in a little bit higher than the previous read. That was interesting. And then looking at tomorrow, we do have the 10-year note auction. Definitely curious as to what that's going to come in at. If it comes in around 4.1, I think that's going to be pretty weak for markets, but it's still hovering around that 4 zone, and we'll take a look at the yields later in the charts as well. Crude inventories tomorrow as well. And then looking at Thursday, we still have initial jobless claims like every Thursday, 30-year note auction, as well as Fed balance sheet. Pretty light on the data for this week. Moving over to Max Pain, you can see we are still right around that 494 area, just barely above this really strong call wall here at 493. I would expect to finish just a little bit below that on the Friday session. Between 489 and 493 does make sense. I'm not expecting a super bullish finish up around the top of the puts. That would be closer to that 500 mark. And then you can see all these calls sitting at 515. Definitely some players selling some upside. And you can see here total options almost up to 1.2 million. at a put call ratio of 1.9. That ratio is going down a little bit, which is interesting. But like I said, this still looks a little bit bearish to me. Moving over to the charts, I'm trying to give a little bit better perspective on price here. So I thinned out the lines, shows the trend a little bit better in the shorter and longer time frames. You can see shorter time frame, we were up a little bit on the day, held this level around 492.25, not a major level, but we consolidated there at the highs from February 1st, touched that level pre-market February February 2nd, grinded in that area after hours yesterday and then during the day today, and then bounced a little bit. Momentum on the hourly, slightly bullish. Obviously, the structure on the daily chart, very bullish. Hit this trend line here, pulled back. We'll see if we can rally back up to it. That would be right around that 498 area. Like I said, max pain for the week still is a little bit bearish to me. So even if we see a spike up, I would expect some rejection from that 497, 498 area. Momentum, not showing much of anything. It is technically bouncing into bullish, but I wanted to highlight the fact that this is not consistent at all on the charts right now. Normally what you want to see is a nice swing. You can see bullish, consistent swing to bearish, consistent swing to bullish, consistent swing to bearish. But right now we had a little bit of a choppy move to bullish, and it's definitely choppy here, so that's not showing us much of anything on momentum. And then looking at RSI, let's look at it. You can see we're below the SMA. We have clear divergence from these previous highs, so that's a little bit weak as well. So like I said, structure still bullish, could absolutely upswing, but I wouldn't expect it to hold. And then moving over to the NASDAQ here on the hourly chart and the daily, you can see this looks quite a bit more bearish. Pretty big breakdown early in the session, got all the way down to 425.25, touched that highly traded zone, then rallied up right to that trend line and then started to break down from there after hours. So this looks like a break, retest, potential breakdown. Not great there on the shorter time frame, especially with this cleared double top or topping pattern, however you want to look at it. Definitely had some consistent topping in that zone, and now it's starting to break down a little bit. I do want to highlight this more on the short time frame. You can see you have kind of a bigger double top, and if this midpoint breaks down around 416.66, that's kind of that touch point right there. If that level breaks, then this is going to be quite a bit more bearish. We're not quite near that yet. You still need to see 425.75 break, which it has not done quite yet. And then looking at the longer time frame, obviously the structure is still very bullish. We've been seeing it rally for many months, and that has not broken down yet. Moving over to the Russell and the Dow, you can see the Russell has been in this downward channel. We're below the 9 and 21 EMAs. We did pop above the 9 and VWAP a little bit in the mid-session, and we did hold that into the end of the day. You can see momentum here on the 4-hour chart ticking towards bullish a little bit. We're right at this short-term downtrend line. Super important. We'll see if we can get above that. And then the 21 EMA sitting at 194.13. And then above that, you have a level at 195.15. So still a long ways to go. This has definitely been consolidation. You can see as well, this is clearly a lower high from the previous high, so there's definitely weakness. But shorter term, you can see a little bit of strength on the Russell. It's worth watching. Critical zone here. If it can get above that 195.15, then you can look for a double top up around 199.50, or even a push to that most recent high up around 205. So that would be interesting. Definitely watching the Russell tomorrow, critical point. And then looking at the Dow, really no change to the structure, continues to trend a little bit higher every day. It was down yesterday, but just to the trend line, and then rallied back up here today. So slightly bullish on the day. Resistance up around 387.77, added that level here at that previous wick high, and then above that you have trend resistance up around 389.50 or so. Moving over to Chipotle here on the charts. This is the weekly chart. You can see we've been uptrending basically here since around $250 up to $2,500. We've had some pretty decent swings. You can see we topped up around $1,950, pulled back down to $1,250 or so, and then we've rallied back up to $2,500. So this has been a massive run. This is going all the way back here to October of 2017. It's been in this longer term uptrend, and now you can see we're popping up to that trend line, getting close to that 2,700. That's where I would expect to find some resistance similar to what we had here. Just to be clear, this is all new analysis. I added all of these levels and trends here today, so nothing is predictive, but you can see we hit this trend line, kind of broke down from there, and then hit this lower trend line, rallied looking for that upper trend line. Like I said, 2750 does make sense, and we are up a little bit more after hours. Let's look at it on the shorter time frames here. Starting off with the daily chart, you can see definitely still in an uptrend. All the EMAs and SMAs are in the upward position, and then looking at that trend line right in that zone, and then looking at the hourly chart, you can see that pop after hours on the earnings announcement. Instead, it was up only about 1%. It's actually up a little bit more than that now. From the time that that article was published, it's up about 2.5%. So It is moving higher. Looks like a strong catalyst. I would expect this to continue higher. Definitely an expensive stock in terms of price here at $2,555, as well as the fact that this is just an expensive company when it comes to fast casual. Moving over to Apple and Tesla. Apple continues to find a little bit of legs. You can see this big move down on earnings, hit the trend line, double bottomed, and then bounced right back into this range. You'd almost be curious if they did a little bit of buying as a company to kind of offset that down move. But right now it is grinding a little bit higher. It's above the 9 and 21 EMAs as well as the 55. And you can see here on the hourly chart, we did get above that 144. So resistance up around 190. You got the 200 sitting at 190.21. This has been a pretty choppy chart, so I wouldn't say that it's trending by any means. Hit this previous low from January on that earnings. In terms of a price target, you'd be looking for a double top up around 196.14 or so, which does give you a decent amount of upside. It's about $6 of upside from here. So certainly possible. Needs to get through this zone right where we're at. That'll be interesting to watch tomorrow. And then looking at Tesla found a little bit of strength. You can see it did rally on the day after hitting this 177.70 level in the pre-market this morning. It did test it yesterday and hold, and then tested it again here today and held. So that's a little bit bullish. Obviously the structure is very bearish. You have all of the EMAs and SMAs in order stacked on top of each other, so that's a bearish structure for sure, and it's been trending down for a while. You can see it here, but we're testing the 21 once again. Could be interesting if it breaks through there, test the 55, retest that 21, and then holds and rallies through. That could be a bullish setup, but right now that's not what we're seeing quite yet. Just a test of the 21. You need to see it rally through up to that 194.39 level, hold that, retest, and then rally through is what I would look for. Moving over to semis, these continue to look like they're driving markets around. So NVIDIA was down a little bit on the day. Not too bad, 1.6%. It was up really strong yesterday, 4.79, so it still held most of those gains. But it is down a little bit more after hours, 682 down to 677, which is interesting. Let's look at that on the hourly chart. You can see it here. It did fall through the session, hit that 55, and then it's right in that zone of trend support. We'll see if that area breaks tomorrow, and then you have the 144 EMA sitting at 637.99, so that would be interesting right at these previous tops as well, right in that same zone. Obviously, the structure here is still very bullish on both of these, and you can see it here. We're going straight up in both of these. But taking a look at Broadcom, you can see we did top out here on 25 January, hit that 1281 level, tried to get to there again, gapped higher today, and then sold off pretty strongly, down 1.65%. Momentum bearish, RSI bearish. I would expect this to move down to the 21 EMA down at 1173, and that's interesting. So both of these are moving a little bit lower. These have been some of the strongest stocks out there, and if these are starting to sell off, that could be interesting, especially when we see the Russell showing a little bit of bullishness here today. Moving over to staples and discretionaries, both of these look a little bit more bullish once again. So staples tested this trend line, tested that 9 EMA area, didn't quite get there, almost touched it, and then rallied up. So we're pushing back towards that 75 level. Momentum not really coming with it yet, but RSI looks good there. So looking for a break above 74 and then a push to 75.40. And then looking at discretionaries, this looks quite bullish as well. We broke above this trend here on Thursday, gapped up and pushed on Friday, retested here on Monday, looked a little bit bearish. And then here today, we did gap down and then ended up finishing bullish, 0.61% on the day. Momentum, just look at this chart for a second. Really choppy, not a ton of momentum relative to what we've been seeing, but it is bullish, so you do have to respect that, and you can see it here. We are kind of swinging towards bullish, just not a lot of enthusiasm there yet. Still technically bullish, so do respect that, but not great. And then you can see that EMAs and SMAs are a little bit choppy here as well. Let's go ahead and full screen that so you can see what I'm talking about. You got the 21 above VWAP, and then you got the 55 and then the 9 EMAs. So you can see definite consolidation of EMAs as well as VWAP, and they are definitely not in a good order. You want to see 921, VWAP, 55 in a consistent order as price is moving higher, showing that healthy trend, similar to what you would see here, 921, VWAP, 144. You'd really like to see that below the 55, but this has been sideways choppy price action, so we haven't really seen that super well on discretionaries going back to probably here in May. We saw a really good swing, so 921, 55, 144, and then 200. So they were all in order on this upswing, but before that it was consolidation, and that's what we have now. So we're kind of waiting to see what happens. I have short-term resistance 178.50, and then 180.10 is my level above that. So moving over to oil and gas and utilities, I wanted to follow up on these from yesterday. So the run on oil and gas did continue. It hit this highly traded zone at 132.13. I really wanted to see it break up to 135. Didn't quite do it. We hit that 55 EMA and rejected, and then got below the 200 and fell. So right now it is still a pretty good setup as long as this 21 holds here at 130.60. That's the opportunity. Momentum doesn't look great. It looks like it'll push through that zone, honestly. But if it does hold 130.60, that's the opportunity. If that breaks, then you're looking for a double bottom closer to that 128 area. And then looking at utilities, this actually does look pretty interesting. Let's go full screen on utilities. This could be a double bottom here. So we fell really strong yesterday, which was a little bit surprising on utilities. That was a big move, over 2%. But then we got to this level, almost touched it at 59.95. The low of day was actually 59.99. So if your level's 60, which you could very easily move this to 60, you could argue that it did touch. Momentum continuing to tick towards bearish, which is not great. But this looks interesting here. Double bottom could be. RSI looks okay. RSI went higher on that bullish candle, 0.37. If this 160 holds, and this is a true trend reversal, then you could look for a test of that 200, which is up around 63.73 right now. So that would give you a little bit over 5% of upside from current levels. So something to watch for. Pretty tight stop of about 47 cents. Looking for a pretty decent upside there of almost 5%. So keep an eye on that. I do think utilities might be an opportunity, and it's a little bit safer sector as tech is currently at all-time highs and showing a little bit of weakness. Moving over to transports and industrials, I wanted to highlight the breakouts that we're seeing here. So transports had a massive day, 2.35%, and it did break above all of these recent highs. So the high here from mid-July, we're above that now. The high here from mid-December, we're above that as well. So a big breakout, momentum bullish, RSI bullish, everything looks strong here. Trend resistance up around 272.70, and then I have some level resistance at 276.50, and that's going all the way back here to almost all-time highs. It's kind of this turning point from 31 March of 22. So we're getting into some levels we haven't seen on transports in quite a long time. So potential upside there. Also could be a precursor for the Dow to be going higher. The Dow has rallied and transports have lagged, and now we're starting to see a little bit of catch up from transports. And then similarly here on industrials, got another new all-time high close, 115.98. Trend resistance up around 118. Let's go ahead and add some levels here. I don't have a ton of levels on transports because this is all-time high. So it's hard to put in levels because there's really no historical price action in this area. So let's go ahead and lock these in right there at 116, and then another one here at 114.50, right at that level. We'll see if we can break it and then look for that trend up around 117.75. Moving over to breadth, you can see we did see a little bit of a pop in breadth. Not a lot, but a little bit. So the 20-day average did bounce, almost engulf the previous candle, got back up to 56.26. Momentum not following through yet, but RSI looks a little bit more bullish. You can see we tested the SMA and bounced. So that's interesting. You could argue left shoulder, head, right shoulder potentially. If this starts to upswing towards 55, could be a little bit more bullish in the short term. Right now it just looks like consolidation, not showing much of anything yet. And then looking at the 50-day average, slight bullishness there after the test of the 200 yesterday. Momentum still bearish, RSI still bearish, but getting close to that SMA. If it breaks down from here, I'm expecting a break of that 52.80 level, which would be quite bearish. This has been a pretty decent downswing. I am expecting it to cut deeper. In any little rallies that we see, I would expect to be met with bearishness, similar to what we saw here in mid-January. Moving over to yields, you can see we did fall a little bit today. So the 2-year hit that 55 EMA and then broke down, hit the level back at 440. You can see I have a short-term level right at these previous tops. We're right there at the trend line as well. Momentum did roll over a little bit. And then looking at the 10-year, similar thesis. Didn't didn't fall as much, 1.38 versus 1.5, down to that 55 EMA. So you can still see structurally these are different. We're above the 55 EMA. We're testing that 200 SMA right in that same zone, whereas the 2-year 200 SMA is up around 4.7. So definitely looks a little bit stronger in terms of structure, still holding above the 55, the 21, and the 9 EMAs. You'd really want to see those get back in order. I'm looking for more normalized conditions, waiting to see that 10-year get back above the 2-year. We have not seen it yet. That's why I continue to watch those auctions, and I'm curious to what the 10-year auction will come back at. But right now, seeing a little bit of weakness with the 10-year still holding up a little better. Moving over to the 200-day average as well as the put-call ratio, you can see the 200-day average hit that 55 EMA and then bounced a little bit from there back into that 70 range, back above this trend line. So the 200-day average is still holding in there pretty decent. Just wanted to highlight that pretty bullish day that we had. Mimics more the 20-day average versus the 50-day average, but really I wanted to highlight the put-call ratio here. Look at this massive gap down that we had at this trend line. So we tested that yesterday and the day before, and then we gapped through it pretty massive all the way down to that 0.7 area. That's a pretty low level. It's not crazy low. Once we start to get into that 0.5 range, that tends to be kind of a topping area for markets. You can see we hit it here on 27 December, but this is a pretty decent bullish move. If we see another spike tomorrow or the next day, that could be an interesting indicator that there's just not a lot of puts or fear in the market. You can see we hit some tops around that 1.4 area, and then we saw a bounce from there. And we've seen some bullishness over the last few days, but right now it's just not doing it. And right now you can see that follow through on the put call ratio. If we get into those lower ranges, could be interesting. I might actually add another level. This 0.5 level seems a little bit low. We don't hit it super often. Maybe something in that 6.3 area seems reasonable, but we're not quite there yet either. Let's go ahead and add that level. I think 6.3 is a reasonable level. We hit that a little bit more consistently as a better trigger. You can see even on this recent dip low from June into July, we were right in that range for a while, which was a pretty big top. And then we rallied through up into that 1.4 area. So pretty interesting. Didn't quite get to that 0.5 level. So let's have a little bit better there. And I'll continue to watch this over the next few days. Moving over to the dollar, we ended up getting a little bit bearish day, which is interesting. Looking at Friday into Monday, super bullish. But here today, a little bit bearish, breaking down from that level, 104.41. We tested it yesterday, tested it again today, and then broke down. Thought we would get to the trend line up around 104.8. Didn't quite get there. Momentum still bullish, so we could absolutely hold in this area. But looking at the hourly chart, you can see the 9 is below the 21, and then the 55 is above price as well. They're not stacked in order quite yet, but this does look quite bearish. If this area of consolidation breaks really at 104.01, then you would expect to push back down to this most recent level at 103.6. So continuing to watch the dollar. I am still expecting dollar strength, but it does look a little bit bearish in the short term. Moving over to JNK and TLT, you can see JNK continues to hold this structure. So we tested the bottom yesterday, bounced from that level into the mid zone, still holding a consolidation clearly between these levels. And then looking at TLT, we did catch a little bit of a bounce as well. Didn't quite get down to the trend line like I thought we would or hit that 55 EMA. Momentum is still bearish, so I'm not saying all clear yet. But RSI hit the SMA and bounced, so that's interesting as well. This is still bearish to me in terms of structure. You can see clearly a lower high from the previous high, but you could argue a slightly higher low from the previous low. Pretty tough trading here on TLT. The structure is still bearish to me, like I said. I would be bearish bias. You are below the 200 SMA. You have a consolidation of EMAs to your upside. So resistance in this area. If it breaks back down from this zone, I would expect it to push down to that 92.82 level. And then below that, I have 89.16. So still slightly bearish, but an interesting pop here today. Moving over to volatility, you can see we did have a pretty big breakdown. So I've been watching this structure. We're still not below these previous lows, and we're still not down to 1240 yet, but this does look quite a bit weaker here now. So we're back below the trend line, momentum rolling over, RSI looking bearish. So in terms of structure, this looks a lot weaker. We're also below all the EMAs and SMAs on the daily chart. Let's look at the hourly here just for a moment. Yep, definitely bearish. So you can see we've broken below all these levels. We've been watching this zone pretty consistent, holding that area. So still might get there. Let's go ahead and extend that out. See if we get into that zone again, right around that 1240 area. But right now this looks weak, looking for 1275 and potentially 1240 once again. And you can see this high is lower than the previous high. That does break the structure as well. All of these peaks have been at least even, if not higher. Now we're starting to see a little bit of weakness there in the VIX. So maybe we see a little bit more bullishness, or we're just seeing complacency. Moving over to my accounts, I continue to do nothing with these positions. Not a bad time to be a premium seller as price action continues to be sideways or slightly bullish. Q's positions down just a little bit, but not much. Enough to be covered by these call positions. And looking at the IWM, you can see I'm still holding 189. My max profit on this position is 195.26. So that gives me about another $2 or $1.75 of upside on this position over the next month. We'll see how that plays out. Again, like I said on the Russell, it does look a little bit bearish. We're just seeing a little bit of a pop there. And then looking at the Qs, continues to downtrend slowly, and it is slow enough to continue to be covered by these share positions. My strikes are all the way down at that 410 area, so plenty of protection, still bringing in that premium. And then TQQs sitting at $55, still pretty deep in the money with a $2 credit, so plenty of protection on all of these positions. And again, I turned a little bit of a profit on the day. Let me know down in the comments section what you think of Chipotle Mexican Grill. Is it still a buying opportunity? How much higher can it possibly go? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.